Hey everyone, and welcome back to the channel where we demystify the markets and shine a spotlight on some of the most intriguing setups. Today, we're diving deep into the world of hard-to-borrow stocks and potential short squeezes, focusing on a very specific name that's recently caught our attention, AFJK, or AMA Health Technology Company Limited. Now, before we get started, please remember this important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Let's talk about AFJK, AMA Health Technology Company Limited. Show AFJK ticker and company logo. This isn't your typical operating business. AFJK operates in the financial services sector, specifically classified as a shell company. With a market capitalization of $40.02 million, its primary intention is to effect a merger, share exchange, asset acquisition, stock purchase, reorganization, or similar business combination. Essentially, it's a vehicle looking for a business to acquire with a stated interest in small-cap biopharmaceutical companies. Show AFJK 30-day chart. Recent price action has been rough today. AFJK is down -1.55%. Looking back, it's seen a significant drop of -53.46% over the last 5 days, and a staggering -69.44% over the last 30 days. Volume today is 59,300 shares, which is nearly 4 times its 30-day average volume of 15,070 shares, giving it a relative volume of 3.9x. What is cost to borrow and why it matters? So, what exactly is cost to borrow and why should you care? Show animation of short selling process. When you short sell a stock, you borrow shares from a broker and immediately sell them, hoping to buy them back later at a lower price to return them. The cost to borrow, or CTB, is the annualized fee your broker charges you for lending those shares. It's like interest on a loan. This fee is driven by supply and demand. If many people want to short a particular stock and there are very few shares available to lend, that fee can skyrocket, often well over 100% annually. It's a key indicator of how hard to borrow stock truly is. Why this stock is hard to borrow right now. This brings us directly to AFJK. Highlight CTB number. Our screeners flagged AFJK because its annualized cost to borrow fee is an astonishing 1124.6%. Think about that, over 1100% just to hold a short position for a year. What's even more striking is the momentum behind this. The CTB has increased by a massive plus 551 percentage points over just the last 5 trading days. This isn't a slow build, it's a rapid acceleration in borrowing costs. Show borrower availability. To further illustrate the scarcity, there are only about 1,000 shares currently available to borrow. This combination of a rapidly surging, incredibly high CTB and an extremely limited supply of shares tells us that AFJK is exceptionally hard to borrow right now. Squeeze mechanics explained. Now, for the big question, what does a high cost to borrow imply about a short squeeze? Show animation of squeeze. A short squeeze occurs when the price of a heavily shorted stock rapidly increases, forcing short sellers to buy back shares to cover their positions and limit losses. This buying pressure, in turn, pushes the price even higher, creating a snowball effect. For AFJK, with only 1,000 shares available to borrow and an astronomical CTB, any significant buying pressure could make it incredibly painful for existing short sellers. They might be forced to cover, meaning they have to buy shares, potentially regardless of price, just to get out of their expensive positions. While AFJK's estimated float is unknown, the extremely low borrower availability combined with soaring CTB suggests a very tight supply side. Our internal composite squeeze score for AFJK is 40.0, indicating a noteworthy setup, but it's crucial to remember that a high cost to borrow does not guarantee a squeeze. It can also indicate that short sellers have very strong conviction and are willing to pay a premium to stay short, believing the stock will fall further. Dilution risk check. One critical factor to consider when evaluating any potential squeeze candidate is dilution risk. Dilution happens when a company issues new shares, increasing the total number of shares outstanding. This typically lowers the value of existing shares and can completely negate a short squeeze thesis because it provides new supply for short sellers to cover with, or simply makes it easier for new shorts to enter. For AFJK, our check found no recent diluted SEC filings like SMIN-S1, SMIN-S3, or 424B in the last 90 days. So, while dilution is always a potential risk for any stock, there are no immediate signs of it from recent filings for AFJK. Again, let me emphasize important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. For AFJK, keep an eye on a few key metrics. Any further spikes in cost to borrow or continued dwindling of borrowable shares would intensify the squeeze potential. Volume is also critical. A sustained surge in buying volume could be the catalyst. Given AFJK's nature as a shell company, news regarding a potential merger or acquisition target could also serve as a significant catalyst, fundamentally changing its outlook. The stock has already seen a substantial drop over the last month, which means many existing short positions are likely profitable. However, that also means they have gains to protect, making them more sensitive to price reversals and rising borrow costs. AFJK, a health technology company limited, presents a fascinating case study in the hard-to-borrow landscape. With its astronomical and rapidly rising cost to borrow, extremely limited share supply, and its unique shell company status, it's definitely one to watch if you're interested in the mechanics of short squeezes. Remember, this is about understanding market dynamics, not chasing guaranteed profits. Stay informed, stay educated, and always do your own diligent research. If you found this breakdown helpful, please hit that like button, subscribe for more in-depth analyses, and let us know in the comments what stocks you'd like us to explore next.